journey. Want to hear the sounds of money? All right.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
And Legal Beagle means it's time to double check and see what is going on with your money this morning with the help of Philip Statler from Statler Financial Services in downtown Sebring. And Philip, happy Fed Day. I don't know whether it's going to be a happy day or not at 2:30 when that comes out, are we?
Well, who knows? I mean, you got to think they're definitely not going to lower interest rates given the numbers we've seen so far this year. I just can't see how they can justify it.
Well, you and I were talking about it yesterday, and that Fed Watch tool they've got up in Chicago. I mean, there's both sides of the fence. It's pretty well a slam dunk. They're not going to do anything today. But when the odds of a rate increase even slightly exceeded the odds of a rate decrease the other day when I looked at it, yeah, I think the outlook for an interest rate decrease doesn't look very good at all, does it?
No, it really doesn't, Dave, and rightfully so. I mean, we'll talk about it in a minute, but inflation just is not getting under control. And let's face it, oil's not helping anything.
Not one tiny little bit. The interesting thing this afternoon isn't going to be the decision itself, probably. It's going to be Jay Powell's press conference afterwards at 2:30. Step number one, he's winding down toward the end of his term and can pretty much say anything he wants to right now. Step number two, a whole bunch of the Justice Department petitions for subpoenas on their investigation into the remodeling of the Fed building. They got quashed by the courts, so he may very well feel a little bit cocky over that. And the producer inflation really is going to give an awful lot of recorders questions because the wholesale inflation numbers this morning bordered on shockingly bad, didn't they?
They did, Dave. They did definitely not good for sure. We saw a huge increase in the PPI. It was expected to come in at 0.3%. It came in at 0.7%, and that's 0.2 more than it was in January, where it was up 0.5%. So it just wasn't good news when it comes to inflation. And core PPI was kind of the same boat, Dave. It was up 0.2 more than expected, came in at 0.5% versus 0.3. So I guess that's not good news.
That's the really crummy news because the core number takes out the unstable stuff that goes up and down like, looking at you, energy. So even the stuff that we expect to be stabilizing in prices going up faster, I think it really made me drop my false teeth, is when you annualize that top line number, and they're talking about a 3.4% wholesale inflation rate. Good heavens. Two's the target, and we're moving away from it like a freight train.
We are, Dave, and that's what gives me concern, that I just don't see how they can justify an interest rate cut. Though I've seen headlines that say a survey of the Fed governors expect to still see one rate cut this year. A lot's going to happen before that can really come to fruition.
I suspect so. You and I were talking about it beforehand, before we went on the air. I suspect that expectation survey has got to be based on just the feeling the American public has absolutely no patience for an extended war, even if it's one that the public supports, and there's a split vote on that front. I suspect that inside of a month or so, we're going to figure out a way to declare victory and move on one way or the other, simply on the grounds the public won't put up with it. And that makes the governors say, well, this won't last forever, so they're still projecting it. That said, we'll get a fresh dot plot out of the governors on the Open Market Committee today. It's going to be interesting to see whether or not that informal survey is backed up by the dot plot numbers the Fed comes out with today, won't it?
It will. It will definitely do that. And it's affecting futures today after really a great day yesterday, Dave.
Yeah, it was. It was a green day. Not as good as it looked when we first started the morning out, but still, Dow ended up yesterday up by 47. The S&P was up by almost 17. That's 0.25%. Nasdaq had a good recovery, almost 0.5%, up $105. That's 2 days in a row of actual something resembling optimism. And then we get the crud this morning. I got to believe when we get to the futures, it's not going to be the good news we had yesterday.
No, definitely not, Dave. Really, and across the board, we're seeing some declines, except for oil. But yeah, so on the economic front, I'm trying to see what else do we have this week. Well, we got jobs tomorrow, and that's really about
Mm-hmm.
it
Yep.
this week.
It's a quiet week. Tidbits I found this morning. This is interesting. They're back up to something that I thought they might have forgotten about because it came up about 6-8 months ago. Securities and Exchange Commission is ready to prepare a formal proposal to do away with the requirement that companies report earnings every quarter. Remember about 6 months ago, we saw that floated and it just kind of got booed down. Well, now they're talking about doing it as a formalized proposal. Give us less to talk about, wouldn't
Yeah,
it?
I'm gonna tell you a lot less to talk about.
I worked for a publicly traded company for about 10, 12 years before I moved down here 23 years ago. And our CEO always considered taking the company public. He called it taking the devil's money because he ended up having to manage the company for quarterly results or our stock price went in the tank. Some company CEOs that actually would like to be able to manage a company for the mid to long term, probably looking at their relief from quarterly reports as being a positive thing. On the other hand, investors are saying, "Oh, good Lord, where's the data we use to make decisions?" It's a legitimate split vote and viewpoints.
It is because the guys that want to make a living trading this stuff, they want as much information as they can get. And obviously, like you said, the C-suite in these companies, they want to keep as much as they can close to the sleeve because that way they can, manage accordingly and not have to manage for stock price.
And one of the legitimate beefs, and criticisms of the notion of a publicly traded stock system or a way to do business comes from the notion that, basically, like Ed used to say, I got to manage for a good quarterly report, not in terms of the long-term future of the company. And the company I worked for was famous for actually operating radio stations long-term instead of buying them and selling them in order to look good for the stock price. So, and that's common across the business spectrum. So there's a legitimate argument either way, but not knowing for 6 months how a company is doing kind of hamstrings the investor's ability to evaluate as well. So it'll be interesting to listen to the debate on this.
It will. We'll see what I'm sure they will float out some opinion surveys where they'll ask a lot of folks what they think before they make that decision.
Absolutely. One of the big ones in the reporting world is going to be reporting after the close tonight, Micron Computer. And my sneaking hunch, we're pretty much bottom of the barrel now as far as the glamour tech stocks are concerned. They're kind of second-tier glamour, but at the very least they're a known name. That'll be a topic for discussion tomorrow. Today, I gather we got some retail news. How did Macy's do?
Macy's had a really good quarter. They struggled here and there, but they beat on both earnings and revenue. And so that's really got them popping this morning. They're up like 6%.
Ooh.
Yeah.
That the rumors of their demise were greatly exaggerated, to borrow something from Mark Twain, right?
At least it looks like it right now, Dave.
Glad to hear it.
Yeah. So another company, Block. Block is not H&R Block. It's Block, the company that does like payment methods and that type of thing. They got a big upgrade, a double upgrade, and so that's got them trading up about 1.5. I was trying to see any actual other earnings. We're getting towards the very, very end of earnings season here, and not much comes out. Well, Lululemon reported their fourth quarter expectations. They beat for the quarter. They had a good quarter, but they're getting killed because they pull back on their expected sales and earnings for their full year of 2026. And so that has them trading down about almost 2.1%.
Ouch. I knew it's a slow day for earnings when one of my tip sheet headlines is talking about how the NCAA basketball tournament could mess up your portfolio. It's definitely slow. Resetting the table modestly green yesterday on the equities markets, and then after some crummy inflation news and just jitters about the Fed today, how we doing 45 minutes early?
It's pretty much red ink across the board, Dave. The Dow is down 0.4. S&P 500 is down almost 0.4, as well as the Nasdaq 100. Everybody's kind of in that same range. Russell 2000 is getting beat up a little bit more, down a little over 0.8%. Flipping to the commodity side, silver's getting hammered this morning, as well as gold. Silver down 2.2%, well below 80 right now at $78.14 an ounce. Gold down 2.33%, well below 5,000 again at $4,891 an ounce. Crude oil is going the opposite direction, up 1.5 to $96.93 a barrel.
Shucks. Looking across the pond, Asian Rim was almost uniformly up after 2 days of optimism on our side of the pond. Mainland Chinese markets were up, called 1/3% or so. Got to make note of the South Korean market, though. Something happened over there. It was up full 5% yesterday.
Oh, man.
Somebody really got happy over there. European stocks have made a U-turn since our inflation report came out. When I looked 15 minutes ago, they were mostly green. Now they're almost all red. The average European index is down by about 1/3% halfway through their trading day, and it's updating and going in the wrong direction. They don't like bad inflation news from the U.S. Getting my retirement together to figure out when and if is something that takes a little bit of trained eyes to help me make sure the plan works. How do I find you to put a plan together, Philip?
Dave, give us a call at 863-382-0037. Love to spend 30 minutes to make sure that folks are on the right path to that retirement they always dreamed of. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM. They can listen to us on the way out to the track, right?
Absolutely. Yeah, we're live and direct to 6 a.m. on Saturday morning, and if you don't get there by 7 or so, you might not find a parking space. It gets that silly this time of the year. See you tomorrow, my friend. Have a good day.
All right, bye. Take care.
Thank you. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Imagine for a moment.
Hey, folks, again, I want to thank you for joining us today. Have a great day. Join us again tomorrow. Bye now.